Hello, hello. A very good Wednesday to everyone. Today we get into the world of speed. We are going to deeply analyze the business behind Formula One, how it works, how much money it moves, and what the strategic play was by the American company that decided to buy it and transform it into a global business. So say no more, let's put it in first gear and take off.
I mean, for anyone looking at this from a global market perspective, the transformation of the sport is just a fascinating case study.
It really is.
Yeah, we are analyzing a massive mountain of data today. We're pulling from the 2025 Global F1 Fan Survey, recent SEC filings from Liberty Media Corporation, and their full-year financial reports.
Right.
The goal here is to figure out the actual mechanics of this massive business turnaround. We want to map out how an American media conglomerate took this historically, very rigid European racing series and engineered it into an $8 billion global entertainment machine.
And to understand the sheer scale of that transformation, you really have to start by looking at the takeover itself. I mean, we were sitting here in early 2026, right? But the foundation for the current version of Formula One was poured nearly a decade ago.
January 23, 2017, to be exact.
Exactly. That was the day Liberty Media, which is based out of Englewood, Colorado, finalized its acquisition of Delta Topco.
Right, the parent company.
Yeah, the parent company of Formula One. They'd initiated the process back in late 2016 by grabbing a minority stake, but January 2017 was the moment they really took the wheel completely.
And the financial structuring of that takeover is honestly worth dissecting if you're an investor. The SEC filings detail an enterprise value for Formula One of $8.0 billion.
Which is a massive number.
Huge. And for those who might not spend their days, reading balance sheets, enterprise value is essentially the total theoretical price tag of the company if you were to buy all its shares and pay off all its outstanding debt.
Right, the whole package.
Right. However, the equity value, so the actual value of the shares themselves, was calculated at roughly $4.4 billion. Liberty Media's total consideration at closing was $4.7 billion.
And how exactly did they finance that? Because it wasn't just all cash, right?
No, not at all. They paid $3.05 billion in cash and then covered the rest by issuing 56 million new shares of a very specific financial instrument. It's known as a tracking stock.
Yes, and that tracking stock is a crucial detail for you if you're looking at market investments. Liberty Media trades this under the tickers FWOA, FWONB, and FWONK. And setting it up this way was a very deliberate choice on their part.
Absolutely.
A tracking stock allows the market to invest specifically in the financial performance of the Formula One group as a standalone entity. It is completely insulated from Liberty Media's other corporate assets.
Right, so you can buy into the racing business without accidentally buying into, say, a baseball team or a satellite radio company that the parent conglomerate might also own.
Exactly. And over the past several years, Liberty Media has actively streamlined that corporate structure. They spun off assets like the Atlanta Braves, basically to position the Formula One group as the undisputed crown jewel of their portfolio.
But the financial engineering, that only provided the canvas. The actual revenue growth came from a radical strategic pivot.
Yeah, the cultural shift.
Exactly. Prior to 2017, Formula One was under the control of Bernie Ecclestone for about 40 years. And his management style was notoriously autocratic and incredibly protective.
To put it mildly.
Right. He operated on a model of strict exclusivity. That meant severe restrictions on digital media. He largely viewed social media as a threat rather than a tool, and younger demographics were effectively ignored, all in favor of maintaining a traditional, older, affluent television audience.
But the moment Liberty Media installed Chase Carey as chief executive, that entire philosophy was dismantled.
It's completely torn down.
Yeah. They looked at the landscape and realized the sport was suffocating behind those restrictive digital walls. So they stripped away those barriers and actually allowed drivers and teams to engage with fans online.
Which seems so obvious now, right?
Oh, totally. They partnered with streaming platforms for behind-the-scenes access, most notably launching that docuseries concept that really humanized the drivers. They stopped treating Formula One as just a 2-hour television broadcast on a Sunday afternoon.
Right, and they started treating it as an always-on entertainment franchise, something that spans 365 days a year.
And the data proves out that strategy perfectly. According to the 2025 Global F1 Fan Survey, the sport's fan base has expanded by 63% since 2018.
That is insane growth.
It really is. They reached an astonishing 827 million fans globally by the end of 2025.
And even more critical for long-term viability is the demographic makeup of that audience.
Right, the age breakdown.
Yeah, 43% of those 827 million fans are under the age of 35. They successfully captured the elusive younger generation that legacy sports leagues spend billions trying to attract.
Which brings us to the financial payoff of capturing that demographic.
Yeah.
Because the 2025 financial reports are nothing short of historic. This past year was officially the most financially successful period in the entire history of Formula One.
It's wild.
Total revenue climbed to $3.87 billion. That represents a 14% jump from 2024, and the momentum really crystallized at the end of the year. The fourth quarter alone generated $1.38 billion.
And the profitability is scaling right alongside that top-line revenue. Operating income saw a 28% year-over-year increase. It grew from $492 million to $632 million in 2025.
Incredible.
Yeah, and when you break down the primary revenue, which accounted for about $3.09 billion of that total, you see a very healthy, diversified business model. It's built on three distinct pillars.
Okay, let's break those down.
So the largest piece of the pie is media rights. That makes up 31.3% of the total.
But this isn't just traditional television contracts anymore, is it?
No, not at all. A significant portion of this growth is fueled by the expansion of F1 TV, which is their proprietary direct-to-consumer streaming platform.
Got it. And the second massive revenue driver is race promotion, sitting at 26.7%. This represents the site fees that cities and promoters actually pay for the privilege of hosting a Grand Prix weekend.
Right, the host city fees.
Yeah. And Liberty Media has aggressively optimized the calendar, focusing heavily on high-revenue destination cities. Events like the Las Vegas Grand Prix act as massive financial engines for this category. They turn the city streets into this sprawling hospitality and ticketing ecosystem.
And then the third pillar is perhaps the most indicative of Liberty's broader cultural success, which is sponsorships. In 2025, sponsorships accounted for 21.7% of primary revenue.
That's a big jump.
It marks a major milestone. This is the very first time since Liberty took over that the sponsorship segment has actually broken through the 20% threshold. The brand appeal has broadened significantly. The cars and the trackside barriers are no longer just advertising tobacco or, automotive parts. They've become a global billboard for major technology firms, luxury goods, and global financial services.
It effectively turns the entire grid into a high-speed marketing platform. And speaking of building a global audience, if you are enjoying what you are hearing today, we invite you to subscribe, leave a like, and comment on what topics you'd like us to tackle next. In the description, you'll find a PayPal link to support the project. It helps us keep making content like this, just the price of a coffee. Thank you for your support.
Absolutely.
So, looking at all that massive revenue generation, the natural question is where that $3.87 billion actually goes.
Right, because they don't just keep it all. A massive portion of it goes directly back to the teams. Liberty Media's financial model dictates that approximately 45% of their annual revenue is distributed to the grid as prize money.
That's almost half.
Exactly. For the 2025 season, the total prize pool distributed to the teams hit a record-breaking $1.4 billion. That's an 11% increase from the previous year.
But the way that $1.4 billion is divided, this is where the financial mechanics of Formula One deviate wildly from almost any other professional sport.
Oh, completely.
That distribution model is incredibly complex, and honestly, it's a bit paradoxical when you look at the raw numbers. In most sporting leagues, the team that wins the championship takes home the biggest check.
Naturally.
But the 2025 payouts tell a completely different story. McLaren won the Constructors' Championship in 2024, and that is the performance metric used to calculate the 2025 payments. Yet, despite winning the title, McLaren was only the fourth highest-earning team.
Right. They took home $165.8 million.
Exactly. And the team that actually secured the biggest payout was Ferrari, collecting a staggering $277.7 million.
It sounds backward, but this quirk of the payout structure is governed by what's called the Concord Agreement. It is a highly secretive, multi-year commercial treaty. It binds the teams, the regulatory body, and Liberty Media together. And the Concord Agreement doesn't just reward current on-track performance. It heavily monetizes historical legacy and sustained dominance.
Which explains Ferrari.
Exactly. Ferrari occupies a completely unique position in the sports financial hierarchy. Because of their historical significance and unbroken participation since the championship began, the Concord Agreement grants Ferrari an automatic 5% base payment from the entire prize pool.
before the rest of the money is even divided.
Exactly, before anyone else gets a dime.
They receive a massive financial head start simply for existing as Ferrari. And the historical bonuses don't stop there either.
Yeah.
Mercedes ranked second in total payouts for 2025. They took home $230.8 million.
Because of the hybrid era?
Right. The agreement includes a matrix of success-related bonuses calculated over a rolling 10-year horizon. Mercedes banked an additional $112 million, entirely based on their absolute dominance during the previous hybrid engine era. We're referring to the complex V6 turbo hybrid regulations introduced back in 2014, where Mercedes just won championship after championship.
And Red Bull also benefits significantly from this structure. They came in third with $202.9 million, and that's due to their own recent string of championships and long-term performance incentives.
So McLaren found themselves in fourth place financially because, despite fielding the fastest car and winning the 2024 title, they lack that decade-long sustained dominance in the top three.
Yeah, they secured the largest slice of the pure performance-based pool, roughly $147 million, just for the championship win.
Right.
But they simply don't have access to the massive legacy and historical dominance multipliers that elevate Ferrari, Mercedes, and Red Bull.
Now, the financial pie we are discussing is about to face a major structural change. The 2026 season officially begins this coming Sunday, March 8, in Melbourne, Australia.
The season opener.
Exactly. And when the cars line up on the grid, there will be an 11th team joining the fray, which is Cadillac.
And the entry of Cadillac introduces immediate financial dilution for the existing grid.
How so?
Well, under the current iteration of the Concord Agreement, which was implemented in 2021, the prize pool is distributed among all competing teams. Older versions only paid out to the top 10. So because the grid is expanding, that $1.4 billion prize pool will now be sliced 11 ways instead of 10.
Got it.
Current financial projections based on Liberty Media's 2025 results suggest Cadillac will be entitled to approximately $63 million in prize money for their debut season.
That means every legacy team is giving up a fraction of their expected earnings. Projections actually show McLaren's championship split could drop to around $127.9 million simply due to the addition of the 11th team.
Yeah, but the overarching financial thesis from Liberty Media is that the expansion of the sport will mitigate this dilution.
Because the overall revenue is growing.
Precisely. Total revenue grew by $462 million in 2025 alone. So the argument is that the pie is growing so rapidly that a slightly small percentage of a much larger pie will still result in net revenue growth for the legacy teams.
That aggressive revenue growth is obviously supported by a fundamental evolution in how the brand is positioned globally. Formula One has really transcended its origins as a niche, technical competition for motorsport purists.
Oh, without a doubt.
It has firmly established itself as a scene-setting lifestyle brand. The race weekend is now viewed as a premier cultural event. You saw this evolution peak at the 2025 Miami Grand Prix.
The paddock was unbelievable.
It looked more like the Met Gala than a traditional sporting event. You had Zendaya, Bad Bunny, Tom Brady, Rihanna, and Roger Federer all walking the grid. The sport has successfully positioned itself at the absolute intersection of luxury, celebrity, and high-end entertainment.
And major luxury conglomerates are watching this cultural shift closely. They are deploying massive capital to integrate themselves into the ecosystem. The most significant move in this space is the landmark 10-year global partnership signed between Formula One and LVMH.
Louis Vuitton, Moet Hennessy.
Exactly. The deal is valued at an estimated $100 million annually. That represents a $1 billion total commitment over the next decade.
And a billion-dollar commitment requires serious strategic justification from a board of directors. The integration of their portfolio is comprehensive across the sport. Louis Vuitton is actually crafting the bespoke trophy trunk, and they're taking over as the title sponsor for the Australian Grand Prix.
Right.
Moet & Chandon has stepped in as the official champagne sprayed on the podium, and Tag Heuer has secured the role of official timekeeper.
And the motivation behind LVMH's massive investment becomes very clear when you look at the broader macroeconomic environment for luxury goods right now.
Which has been tough.
Very tough. LVMH's full fiscal year 2025 reports showed a 5% decline in total revenue year over year. Crucial divisions, including fashion and leather goods and wines and spirits, both experienced negative growth.
Interesting.
The luxury sector is facing a global economic tightening, and brands are desperately searching for high-impact avenues to stimulate demand.
So they look at the demographics we discussed earlier. 827 million fans, with 43% under the age of 35. This isn't just a sports sponsorship for them.
No, this is a highly targeted customer acquisition
Yeah.
strategy.
LVMH is leveraging the cultural momentum of Formula One to put their products directly in front of a young, international, and affluent audience. They're aiming to revitalize their brand relevance for the next generation of luxury consumers.
Exactly.
We're also seeing a resurgence of major financial institutions utilizing the sport for similar reasons. MasterCard just signed on as a primary sponsor for McLaren in 2026 to push experiential marketing at high-profile events like Vegas and Miami.
And that focus on experiential monetization, that is really the final piece of Liberty Media's strategic puzzle.
F1 Arcade.
Yes. They recognize that relying solely on 24 race weekends a year leaves significant revenue on the table. This realization is what drove the creation and massive expansion of F1 Arcade.
F1 Arcade is a fascinating concept. It operates in what they call the competitive socializing market. So instead of a traditional sports bar, they have built premium hospitality venues centered around high-end racing simulators.
Right.
Fans can experience the thrill of the sport while surrounded by premium food and beverage offerings. It effectively creates a dedicated Formula One entertainment hub right in major cities.
And the initial proof of concept launched in London back in 2022. The financial backing for global expansion since then has been tremendous. The venture recently secured $130 million in funding from investors, and that includes Chain Capital and Liberty Media itself.
Wow.
Yeah, they brought in Jonathan Peters as the new CEO to execute an aggressive international rollout. They are constructing a massive 15,000 square foot facility in Atlanta, opening their first mainland European location in Madrid, and rapidly expanding across the U.S. with venues in Boston, Las Vegas, Washington, D.C., and Denver.
The business model here is brilliant because it completely decouples the sports revenue from the live event calendar. Formula One is now generating direct consumer revenue in Boston on a Tuesday night in November, regardless of whether there is a Grand Prix happening halfway across the world.
Exactly.
It is the ultimate realization of the always-on entertainment strategy that Chase Carey and Liberty Media envisioned back in 2017. They took an insular European racing series and engineered a 365-day lifestyle and entertainment conglomerate.
And the $3.87 billion generated in 2025 proves the architecture of this new era is incredibly robust. However, as we look toward the 2026 season, a major variable is being introduced.
The new regulations.
Yes. The sport is implementing a sweeping set of new technical regulations. The engineering parameters are shifting dramatically toward advanced electrification and the mandatory use of 100% sustainable fuels.
Right.
These rules were designed specifically to modernize the sport's environmental footprint and entice new automotive manufacturers to join the grid.
Which leaves us with a compelling question for you to consider as the new season gets underway in Melbourne. We've seen how the Concord Agreement protects the legacy teams and rewards historical dominance. But as the sport enters a radically different technological era with these new engine regulations, will legacy powerhouses like Ferrari and Mercedes be able to maintain their absolute financial and competitive stranglehold?
Or will this technical reset finally level the playing field and completely rewrite the economics of the grid?
The intersection of these new engineering challenges with the established financial treaties will dictate the balance of power for the next decade.
We will certainly be watching every lap to see how it unfolds.
And with this, we reach the end of today's deep dive. We hope you liked it, learned something new, and will join us for the next one. Thank you very much, and we will see you very soon. Remember, the PayPal link is in the description if you want to help us out. Thanks once again. Greetings.